Hey guys and girls, it's Nathan here from the B.Invested headquarters, and today just want to talk a little bit about what's happening out there in the economy. Interest rates, will they be coming down any further? Are interest rates meant to be coming negative? Are interest rates going to be going up? That is my topic for conversation today. So as a lot of us know, I've been talking about negative stuff for 2 to 3 years. Going back 2 years ago, 3 years ago, everyone thought I lost my mind, grew a beard. Started talking about economic crisis, started talking about the global financial depression, talked about certain dates which we would see shit go wrong, which we did. We saw the negative yield curve in the bond market specifically. We started seeing volatility in the stock markets, obviously starting in the Dow Jones. Started to see cracks appearing in the system. A lot of people asked me later part of 2019, Nathan, everything's going up in value. I said, yeah, it looks good. However, look at the repo market, which started going up from around September 11th or 17th. In that time frame is when the New York Fed started buying up the bonds and the repurchasing agreements. Basically, the banks do interbank sort of lending to each other. They close of business each day. If the bank chooses not to lend to another bank, they have to declare which bank they're not lending to because they feel that the bank's insolvent. For them to not do this, then the New York Fed could do the overnight purchase agreements, which generally are short-term agreements for 14 to 30 days. This started occurring. They said that it'd be like 1 week they'd just cover the market. 1 week turned into 2 weeks. 2 weeks turned into 3 weeks. 2 weeks turned into a month turned into 2 months. Here we are around February, March. We're hearing about some guy eating a bat in the back of China, and then coming out from the back of that, suddenly we've got a whole financial crisis here on our hands. So, what exactly went wrong at that point, and what is going to happen here next? As I've said for the last 2 years, I did a 5-part webinar series talking about it. For those of you that are tuning in now and haven't seen all of that, it is on YouTube. It's called Raw and Uncut. Talked about some very controversial topics. Talked about on the 28th of March 2018 when China started trading oil in yuan. Last time people did this was when Saddam got killed and Gaddafi got killed. Within the 6 months of trading oil with gold and oil with euro, going back in the early 2000s. And we have had a debasement and a war going over the power of the money supply for the last 2.5, 3 years. Where are we sitting at the moment? We're sitting at a time where everyone's needing stimulus, everyone needing bailing out. We've only just started to see the surface being scratched on this front. We have just seen, as of 10 minutes ago, Virgin come out and say that they're going to voluntary administration. The stimulus packages are not enough. What will come out of this? Are we going to be picking up planes for pennies and $1 and stuff like that? Who knows? But it's going to be a very, very interesting landscape as we go through. And do we let everything collapse, or does everything get bailed out? And that's like this is what makes this so fun, right? This is what's making this such an opportunity, is that they can't let everything go under, right? And we're in a deflationary period at the moment. There is a lot of blood on the streets, and there's going to be a hell of a lot more blood out there, and that is the opportunity in the market. I've been waiting for this day for 35 years, and looking at the stimulus packages that are coming out, it's great for a lot of people. People can put their mortgages on hold now. Interest rates are going down to zero, and I believe we're going to see a negative at the RBA level. My target range is somewhere between -2% to -3%, which is what I actually did forecast back in early 2018 and recorded in that Raw and Uncut video series. So I encourage you all to go and watch that Raw and Uncut video series, which was really an entry to a mentoring program that I did back at the time. Sort of forecasting and warning exactly to the day, to the dollar, of what is going wrong. So just what happens to the aftermath of this, that's going to be the fun part. We will see our currency ultimately die. Will it die straight away out of this? I don't believe so. I believe that we're going to see us enter into a phase of deflation. They're going to print off a lot more money. What we're seeing at the moment, Nathan, people say, Nathan, the markets haven't gone negative on the interest rates yet. What's going to happen with the central banks? at the moment, what they're doing is that they're buying up the bonds, the RBA, and they're stimulating the economy. So basically, instead of the interest rates going negative, they're artificially boosting them up, which is injecting liquidity into the system, ultimately devaluing the value of the dollar. If they let the bond market, which will get too big, and at some point they'll have to let go of it, interest rates will most likely head into the negative territory. My target range is around the -2% to -3%. And it's just a very interesting time, because this money is going to find a home. It's going to be paid for by the saver, paid for by the average person, and that's where the sensitive part comes in. And I'm here trying to share with you my vision of what I see happening. And this has happened throughout history. It's not just something that's happened once beforehand or whatnot. Take away the scamdemic, or the corona, as everyone's calling it, and replace that with other pivotal points in history which have occurred, which have caused a said financial catastrophe. And we're at a point now which is going to just get very interesting over the course of the next 12, 24, 36, 48 months. They're going to have to print so much money in order to starve off this economic recession / depression. I believe it's depression. That's why I called it a GFD, a global financial depression. And you can find my imprints in Google when I called this. And this is going to make the GFC look like the good old days. It already has. It's going to make the Great Depression look like the good old days. We can't even compare it to the Great Depression, because the money that we use at the moment, currency that we use at the moment, is very different. They, back when the Depression was around, they didn't just print off money like they are today. They did start using, powers to be able to do this, but this is on a far greater scale, something we've never seen beforehand. And I ultimately see opportunities out there. People with debt will have debt forgiveness. People will, we're seeing here mortgages are put on hold, right? The banks, I know single-handedly, that banks at the back end, I read you guys articles going back 12 months ago how they're trying to do simulations on what negative interest rates would look like for the bank, and the systems are like at a Y2K point, and they can't operate for that. We're at a point now where I know single-handedly that the banks are trying to recalibrate their system to accommodate for negative interest rates. That would be very interesting for people with debt out there, especially homeowners and property owners and whatnot. And yeah, just a very exciting time. But I believe not right now. I've talked about hyperinflation a lot. I believe the hyperinflation will occur after this deflation period. So to starve off is not the problem that we're seeing at the moment, right? People will lose their job, things will go wrong, whatever. People will find new jobs. But what the real drama that we'll see from this is, after they fix this problem, the cost of all this stimulus and money printing will come in massive inflation, and that's where I believe that we'll see a hyperinflation scenario occur, from printing up so much money, buying up the bonds, having debt so cheap at such a low level. Everything, the cost of goods of everything will go up. We saw back in the GFC when paddle pops were 80 cents, now they're $2.40. Big Mac meals used to be $5, now they're like 10, 11, 12 bucks. It's occurred in all different areas of life. Property is just a vehicle. I love property for that. It's occurred from all different sort of financial instruments, and the opportunities are just surrounding us right at the moment. It's been happening for the last 3-4 years. The opportunities have been growing, and I think it's time for the tide. What we're seeing at the moment is a bit like an earthquake causing a tsunami. So we started off seeing in Fukushima, whatever you want to call it, in Japan, we saw an earthquake occur. Everyone goes, wow, the building shook. Then the wave went out, and everyone's like, oh wow, the water's disappearing, right? And then the wave came straight in and smashed in everything. Then the wave destroyed the area, but it also caused the nuclear reaction. And from that nuclear reaction, we're seeing deaths, and then we're starting to see economic crisis and whatnot fold out from there. And we're at a point now which is very, very similar. We've seen the tide go out. Everyone thinks everything's fine. There's been a crack in the ground, everything's cool, but we haven't seen the tide come back and smash in. And that's about the next cause of the next 6 months, I think the later part of 2020. we will see a lot of tidal damage coming in, and then we still won't even get to see the real ramifications for the course of the next 2 to 3 years after that. And it's only going to be short term after that that we start seeing the ramifications of inflation penetrating the market. So very, very exciting stuff. A lot of you guys are asking me when do I think that I'll see the the hyperinflation. I believe that the hyperinflation may be anywhere from 3 years to 10 years. That's my time frame from hyperinflation. There's videos from me 5 years ago talking about a hyperinflation that would occur after the GFD. So don't get scared, guys. A lot of people are scared thinking tomorrow cost of goods is going to go up on everything. In some instances that will be the case. In a lot of other instances, we're here for a drawn out period of deflationary period, and all this money that they're splashing around is going to find a home. And this is the opportunity to go and pick up assets, products, anything on the cheap. So on that note, as always, no financial advice given. If you need help with speaking to a financial advisor, reach out. Me and my team can help you on that front. And yeah, stay safe out there, guys. Take care, and make sure that you don't let a good crisis go to waste. Have a great one. Bye for now.